let's get started. So again, I'm going to talk today about gaps. I love gaps. I love trading, and particularly shorts. Today, we had a nice short this morning, quick, fast, in and out. I think it's going to be a wild week for markets. We have a Fed meeting on Wednesday. I'm going to talk about that in a little bit too. But today we're going to talk about trading gaps for a living. I appear on TV and all networks. If you have questions, you can always email me, reach out. Again, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. I will answer the phone, or if I don't, you can leave a message and I will call you back. So again, it's summer. It's actually a really good time to trade gaps because gaps happen fast, quick, early in the morning, like the trade we did today. Actually, I'll just pull this up here. Can everybody see can you see my chart? Did it move off, or do I have to stop the share? Can everybody see my charts? I clicked off the PowerPoint. Again, to chat, you go down to the bottom. Curtis can see it. Very good. Here was today's trade. Again, we were in and out of it quick. And again, I could have held it a little bit longer, but look, if I had held it all day, just kind of went nowhere. Go over here. This is a 1-minute chart of SRPT. This was the trade of the day. Stock closed here, gap down. We shorted it, got the drop, boom. And again, I had a good exit on this, but I didn't hold it to the low of the day. It almost went to 1831, 1830, look at that. But anyways, I traded it, got in, got out, boom, done, called it a day. That is the ticket. That is a ticket. And again, I prefer to short, which we're going to talk about in a little bit too. But in general, again, summer is a great time to trade because we're looking for morning trades, fast trades, quick trades, and then you can spend the rest of the day to yourself. So last week I did a JAWS package, and I'll talk about this more at the end. This gives you all-inclusive 3 classes plus 1 free. So 4 classes and 3 subscriptions. And this was a popular special last week, so I decided to extend it this week because actually, I didn't realize it, but Friday is the real anniversary of the 50th anniversary of JAWS. It's this Friday. I don't know if any of you like JAWS. It's one of my favorite movies, but this Friday, June 20th, will be the 50th anniversary. It's playing in theaters, actually, here in New York on the big screen. So we'll talk about this special. We'll talk about this package at the end. But again, it's one of these things where it's summer, it's time to think about the beach, fun. No one wants to sit at their computer at their desk all day for 8-10 hours a day when it's 75-80 degrees out. You know, and again, for me personally, I've always liked to trade quick, fast in the morning. And again, I do options, and we're going to talk about those in a little bit too. But anyways, getting back to what I was saying about the overall market this week, again, Fed meeting on Wednesday. The market has been bullish. You cannot deny the fact that the market has been in an uptrend, okay? But we've really struggled to get over the high, still have not done it, okay? So in this type of environment, whether it's bullish, bearish, whatever, say we turn, say the market sells off, say the uptrend in the market doesn't last, okay? Bottom line is that this is the type of market, or this is the type of environment, I should say, 2025, like we saw the sell-off at the end of March and at the beginning of April. This is the type of environment where you need to know how to trade both sides. You need to know how to go long. You need to know how to short. But again, if you're someone that prefers going long and you don't know how to short, you're going to miss out. You're going to miss out. So you need to know how to trade in any market conditions, okay? And the other thing you need to know is what's happening in the world. I try to send out breaking news alerts because I'm always have the TV on, or I'm out and about, or I'm on TV as well. Like, I have to follow what's going on just because I appear on television. It's not just trading. But if you're someone that is not paying attention, well, again, you could be in a position, you could be up in the position, and then all of a sudden you could be down in the position because of something that happens that is a world event, okay? So again, we have had some current events this year, 2025, and even in the last few days that are affecting markets and are going to continue to affect markets. I always say this whenever anybody asks me about the market direction. And this was years ago, like before we had issues with the Fed and that one bank that collapsed early 2023. I always said things are bullish unless we have a world war. And there are a lot of people that are concerned about that, again, going into the summer here now of 2025, if things start to escalate with Iran and Israel. So, I mean, these are all things that you need to be aware of. Again, you don't have to think about these things every second, but you have to be aware of it if you're in a position, okay, that something could happen against it. KP there, I see you're chatting. I see you're chatting there. And again, if people just signed in, you can chat at the bottom. You go down to the bottom chat and you can type in a question and I'll see it as we go along. Anyways, Fed meeting Wednesday, okay? No one thinks they're going to cut rates, but they're going to talk about the possibility of what they're going to do in the second half of 2025. So this is an important meeting because they go off for the holiday, for the summer. Again, all of these people, they don't work the whole month of July or August. They're basically off. And so what he says on Wednesday is going to be critical for the next big meeting, which is not going to be until September. So again, no one expects them to cut rates this week, but they're going to discuss what they're going to do going forward in the second half of 2025. When we started the year, people thought they were going to cut rates 3 times. Then they said 2. Some people all thought 5 at the end of last year. I never thought 5. That was crazy. Again, at this point, I think people will be happy if they cut twice. But I got to be honest with you, I don't even know if they're going to cut once. They may not cut at all. And whatever he says on Wednesday is going to create a reaction in the market. So there's 2 things that could happen on Wednesday. He could indicate they're going to cut rates, two more times this year. And the market could then finally go over the high, could continue being bullish. There, Mohammed, I see your chat. The next thing is, again, what if he indicates that, in fact, they may not touch rates. Things are going fine. Inflation's dropping. Everything's great. They're perfect. All the decisions they made. I'm on the camp that they're going to hold. And if that happens, then the market could have a sell-off. Okay. So again, it's just one of these things where we're living in a time right now where it's almost like every breaking news alert, every press conference, every White House press conference, every tweet, like everything affects everything like that. I mean, that's literally like kind of the environment we're living in right now. So how do you avoid that? Take good positions. Make sure that you book money in positions. Don't hold too long. Again, today was a good example. I did that trade in the morning in SRPT, got in, got out. There's only, I don't know who's trying to do something here. Marano, I'm the only one chatting. I don't know if you were trying to chat at the bottom, whoever was requesting. I'm the only one presenting or talking. If you want to chat, you just have to chat a question. Mariano, I don't know if you can hear me. Okay, so I was talking about the Fed meeting. I was talking about the environment we're in. Lots of things are being affected by lots of different things, and you have to know how to trade. You have to know what to do. You have to know what to do in any environment. And again, part of that is making the right pick. And then you also have to make sure you get out when you're up. That's what I was saying. When I was in the SRPT this morning, I booked the profits early, okay, which is very important because, again, then I don't have to worry about the wiggles and jiggles that happen throughout the day. So if you're here and you want to trade full-time, part-time, I don't trade full-time in the sense that I'm not sitting at my desk, like I said, for 6.5 hours a day. The market opens at 9:30, closes at 4. I may be in an options trade all day, but I'm not sitting and watching the trade. I do my day trades in the morning, quick in and out, okay? And if I put an options trade on in the morning, then I will watch it and check it maybe at lunch or later in the day, or I'll just hold it overnight. So again, I don't day trade all day. And even with my options, I don't stare into the screen all day and look at them either. Now, I didn't do any options today. There was nothing to do. I'm in some stuff and I'm waiting for it to go, and we'll see where we go this week. But it's one of these things where no matter how much time you want to devote to trading, the market is only open 6.5 hours Monday through Friday. There's no weekend hours. And again, for me, it's the morning. The critical time is the morning trades, okay? So again, it's a nice career if you're doing it quick, fast, early in the morning. So getting back to what I was saying, you need the right tools to be successful and to get good results. So for me, what are the tools that I use? I have a rating system, okay? This is my tool. You know, when you build a house, or like I have a contractor guy that's coming on Wednesday to hang up some pictures for me. He's going to bring his tools, okay? He's going to bring the nails and the hammers and everything that's needed. Again, my tools as a trader, okay, is my rating system. And this is what I teach in my class that I teach once a month, the Golden Gap class. It is a rating system that tells me this is going to drop, for example, or continue to sell off. One of the nice trades we've been doing, I'll just show this up here, that we've been doing was been Apple, okay? This had a nice sell-off last week. Again, this was 611, dropped 612, dropped 613. We've been short Apple, okay? So again, my tool to show me that Apple was going to continue lower and fall, and in fact not rally, because it's not rallying, okay? It's not a long, it's a short. It's still a short even today. How do I know that? Again, my rating system. And this is how I go about making my picks, okay? I make the trade picks by going through the rating system every single morning, and that helps me determine if it's something that's going to move up or if it's something that's going to move down. And again, for me, I want to mostly short, which I am going to talk about. Again, it's not that I won't go long. I just prefer to short because of the speed that shorts move. Stocks drop way, way faster than they ever rally. Now, here was another one we did, 613. Actually, this was Friday. So everybody see it. This is a daily chart. It's a daily chart of Boeing, okay? So again, I focus on gaps. Now, what is a gap? We didn't talk about that yet. What is a gap? A gap is the difference between the close and the open. So on Thursday the 12th, BA closed at a number. Whatever the number was here exactly, I don't remember. And then it opened the next day at a different number. It was like around 200 or something. So it actually opened lower. So this is what? This is a bearish gap. Now let's look at a bullish gap, just to give an example. Back here, I'm going to go back to May. BA closed here, gapped up, rallied. So this is a case where the stock BA, this is a daily chart, again, we're on the daily, closed at one price here at 4 o'clock and opened at a higher price here at 9:30, okay? And it rallied. So again, technically you could have gone long this, got in, got out, and you could have shorted this, got in, got out, and we did short this actually on Friday, okay? So here was the day trade that we did in the BA Friday. Again, this is a trade that you would have needed a margin account to do, where you short it, you just short the stock, or you could have bought a put. We did puts too, but again, this is a day trade. Short was 210 was the end trade. I had 3,000 shares, and I exited it at 198.45. Profit was $4,950. Now, again, you would have needed a margin account to do this trade. Here was the trade. Again, some people prefer to do options because they say, well, options are cheaper. I get it, but again, I like both. Okay, the reason that I like options is because you can hold for longer periods. You can hold overnight. The reason I like day trades is because I can get fast moves in day trades on the 1 minute chart, and I can maneuver myself quicker and faster in and out. I have more maneuverability where if I short a stock, and I'm just, here's an example, if I short a stock at 200 and I exit at 198, if I have 1,000 shares, I get a $2 move and make $2,000. I might buy a put at 200. I might buy the 200 puts, for example. And it depends what that value will be, whether or not and how fast it drops, and what the value will be if it drops $2. It may not be apples to apples because that's just not how options work. So it may not be if I pay, and again, I'm just making this up, if I pay $2 for a put, it may not be worth $4 in the drop. Whereas again, if I short something where I get the drop, it will be worth penny by penny the exact amount of the move. Does everybody understand that? But again, you need to have a margin account to do a day trade. Okay, this is what I'm calling a day trade because I'm not really day trading options. But here was the trade. Stock closed here, gap down, open, rallied, drop, short it, get the drop, boom. And I just want to show you here, I didn't hold this all the way down here for the day trade. You see where this went? It almost got to 195. So again, I got out of this way above that. Here's where I got out. It was a good trade though, but I just want to show you. So a lot of times people ask me questions about, my trades and my profits for return on investment and risk to reward. I don't always get the best exit in all of my trades. That's not my objective. My objective is to get the best pick, okay, which in this case here was the BA on Friday, to get the direction right, which again was a short, okay? And again, that's what I am trying to do. So again, this is one of the things that I'm very, very good at when I'm looking at something. Is it going to drop? Is it going to fall? Or is it going to rally? Okay? Any questions about this? Matt, you don't understand margin if you're talking about this. If something costs $200, okay, and you have a margin account, and for example, if you take 1,000 shares, you do not need $200,000 cash to take that trade. I don't want to get into a discussion about margin, but if you don't understand margin, you shouldn't be day trading. So again, margin is something that I think everybody should understand, particularly people even that are just like, I just want to do options or whatever, or swing trades. People think they're better off doing swing trades. No, not at all. Margin is your friend, but you must understand it. And if I'm only in a trade for 5 minutes, 10 minutes, or 15 minutes, why would I take a trade on all cash? That would be ridiculous. That wouldn't make any sense. So whether you use a broker that offers you 4-to-1 margin, which is retail brokers, or there's prop brokers that offer 10-to-1 margin or more, everyone that trades, that's an active day trader, that's in and out trading between the 6.5 hours that the market is open, if you're day trading, and again, I'm not talking about options, you don't need a margin account to do options, you should understand margin, and margin is your friend. It will allow you to take more size of a position and trade more expensive stocks. Now, I don't think this is that expensive. I think the SPY and the Qs are expensive right now. Again, where they're priced at, the SPY is over $600 a share, the QQQs are over $500. That, again, people prefer to do options because of the cost. I get it. But if you would buy a put in BA and get out of it in 5 minutes, I guarantee you, again, there's no special equation for this. You're not going to get the same profit as you would if you do a day trade and you get a $2 drop in BA and you have shares. You must understand margin. It's very important. It will help you be profitable if you understand it. People are scared of margin because they don't want to take margin trades and hold them overnight. Well, I'm not doing that. I'm not swing trading. When I take an option, if something costs $1 and I'm risking the dollar, whatever amount I have on, say I take 10 contracts, I'm risking $1,000. I can't lose any more than 1,000. The trade isn't on margin, okay? And I don't hold day trades on margin overnight. So again, margin is your friend so that you can take 2,000, 3,000, 5,000 shares of a stock like Boeing, okay? And again, you have to find out from your broker how much margin you get. If you have 25,000 or more in a retail account, you will have 4-to-1 margin at any U.S. broker, okay? And there are prop places you can go to, but I would definitely do your due diligence at prop places and check them out. Kay, if you can trade anywhere. If you want a referral, you can email me, but you can trade anywhere you want to. I don't sell any type of charting systems or have any kind of relationship where I get any money for referrals or anything like that. I have always, since I started the business, set myself apart from the broker because I don't want you to have a problem and then you complain to me. If you go to a broker, they're responsible for your fills and answering your questions, and you've got to ask them how much things cost and what stocks are available and if they're going to charge you fees, platform fees, or or people, everyone, a lot of places now are not charging fees to take shares. But back in the day, a lot of places did, but there are still places out there that will charge you. Again, so you have to call and do your due diligence yourself to go to the place. I don't force people to go anywhere. I just keep myself out of that relationship because, again, I'm doing the teaching, I'm doing the education, I'm helping you with the pick. I can't say any one broker or another is like fabulous, 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 or anything like that. In all the years I've traded, which is 17 years now, I've traded at different places. All of them have pros and all of them have cons. And that's pretty much where I'm at with it. So it's not like I can say, oh, this one's fabulous or this one isn't. There's pros and cons to every place. I can't say that none of them have problems, to be honest with you. And it's the same thing with the platforms. Like you're gonna find something that you like at some, and you're gonna find things that you don't like at others. So you just gotta kind of find the best fit. Kind of gotta find the best fit for you. And that depends again how much money you have and where you're gonna trade and whether you're gonna do options or whether you're gonna do day trades. Some places like prop places don't let you do options. They only let you day trade. So again, it's like, what type of trading are you going to do? Some people are trading their retirement account. Well, obviously you have to go to that place. And again, you have to find out, are they going to let you buy a put and sell it? Because that's how I'm taking a trade. Like if I'm doing a put in BA, I'm buying the put to enter it and selling it to get out. You got to check with your place wherever your retirement money is. Do they allow that? Can you trade options? You got to find that out too. Is the account set up right? Do you have a limit a number of trades that you are only allowed to take in a week or whatever it is? So these are all questions for brokers. And again, I'm not a broker. Anyways, what is a gap? A gap is the difference between the close and the open. Stocks gap most every single day. Not every gap is a good gap or what I call a golden gap. I am looking for gaps that are predictable. So how do I do that? I use my rating system. There are lots and lots and lots of gaps on any given day. Thousands. They're not all predictable. You say, well, I can do this. I can just go long every bullish gap or short every bearish gap. No. Just like you can't say, well, I can do every gap for every gap fill. No, that's not going to work either. You can't reverse every gap. That's not going to work consistently. Again, sometimes anything works. Sometimes you can cross the street and there's no cars going by and you're not going to get hit in New York City. Sometimes you can't cross the street without looking, even if the light's in your favor, to be honest with you. So again, it's like one of these things where you have to be careful. You have to be careful and you have to think about what you're doing. And again, this market, I really think you have to think about what you're doing. Now, again, what is a gap? We had a gap up in the market today. Surprising. Why? We were actually down last night in the futures. So actually, let's go back to Friday. So Thursday, the market closed here. This is a QQQ's gap down on Friday. So the market gap down, closed at 4 o'clock, gap down here at 9:30, open. Rallied, we were green on Friday, totally fat, lost it all, came down. Last night, the futures, we were down. We were down here last night. And then by Monday morning, by the time the market opened at 9:30, the U.S. market opens, we gapped up. Closed here at 4 o'clock, gapped up at 9:30, rallied. We did not go long the market today, okay? But this is an example of a gap up, and this is an example of a gap down, okay? Now, here's another one. Again, we talked about the BEA. I loved the BEA Friday. Closed here, gap down, fell. So again, even though this closed with a taily thing here, again, this is a candle, it fell. There was a sell-off. Remember the 1-minute chart where I showed you where that came down. Any questions? Any questions so far? Bid-ask concerns for what? Every single stock that we're trading has volume. You're going to get filled. There are some stocks that we trade that might be spready, but there's nothing you can do about that. Most stocks that we trade, though, are not that spready. So, and that's just, again, the choices that I'm making in the stocks that I'm doing. Anyways, getting back to what I was saying, when I decide I want to do something, I feel a high level of conviction in it. And then that makes me feel like I want to put my money on the trade. Like, this is worth taking. Apple's worth shorting. Let's do it. And we do it. Again, otherwise, I'm like, oh, this is a 50-50 crapshoot. And to be honest with you, I feel that way about the market. I feel that way about the market right now. I was talking about this last week when I was on with Charles Payne. And I was telling him that I don't think this market's going to go anywhere higher, go over the highs. And if it does, I think it's going to falter or fail. I'm not, shorting the world here, okay? I'm not shorting the world. I will short the world if I think it's going to set up properly. But again, I'm not long the market here because I don't have conviction that it's going to move up. Okay, this is a stale movement and not really an incline and a sideways market for the last 2 months, in my opinion. So in my opinion, the market should have already gone over the high. Okay. So again, when I look at something, I said going long the market here, the SPY, the QQQs, or a million other things, is not a good trade to me. Okay. And again, with options specifically, go back, you have to get the timing right with options. So you could say, well, this isn't an uptrend, let's do calls. Yeah, but you may not make any money doing the call. Because if the move doesn't happen fast enough, quick enough, or in the time that you are taking the trade before the expiration date, you're not going to make money and be profitable for whatever it costs you to do the trade. Does that make sense? And this is the danger, I think, for a lot of people right now that are trading, because the market really hasn't had the push, hasn't had the momentum that we saw, for example, last year, November and December, when we were running up. Or even, again, the drop-off, the sell-off that we had February to March, beginning of April. We had a movement to the downside, momentum. Very difficult to make money trading something if it doesn't want to move, okay? So I'm looking, again, when I'm looking at a trade, I'm looking for high odds. So again, how do I determine this? I use my rating system. I go through the points. This is what I teach in the class once a month. And it's a very useful tool. So I don't have to worry about what did Elon Musk tweet? Is he fighting with Trump? Did they make up? What did the Fed guy say? Again, I can see the gap. I'm going to be able to see the gap on Wednesday morning or next Monday, after the Fed meeting. I'm going to be able to see it. I'm going to be able to look at the price action and rate it and make a determination if I want to go long or short. Okay. So it's not about, well, I think this and I think that. It's, I add up the points, okay? And that really takes a lot of the stress out of it when you're trying to decipher really who's doing what in a world where things are crazy, to be honest with you. Things are just absolutely crazy. Now, one of the biggest option shorts we had in the last month was Tesla. Actually, it was just in the last 2 weeks or whenever it was. And again, actually, I was just talking about this. This is when Musk and Trump were fighting, and there could have been another reason, but I didn't know any of that when we did the trade. So again, here is a gap. Let's just review it. Stock closed here, gap down, and this absolutely tanked. So the day that this occurred was June 5th. Okay. We were already in puts coming into the day here for this. And again, I didn't even know that anything happened with that feud until much, much later in the day. Not that it would have mattered, okay? I already liked Tesla lower, and we were already in trades, okay? So Wednesday the 4th, 10:39 in the morning, I sent out the Tesla 330 puts that expired the 13th. So let's go back. So the 4th was here. So we did puts here in Tesla. Then we did the 330s. Then it followed through here. So we were in the money, okay? And then it fell. And this really was insane. This was an insane move. It almost got to the dream target down to 270. It was like 273 and change. So again, talking about momentum and how to make money doing options, you need the momentum, okay? So this is big momentum. You would have wanted to be short. Again, you could do a day trade short or you can do a put, but we were already in the puts, okay? So this was just a really, really nice trade. We did it on 6.4, got out 6.5. This wasn't cheap though, but still, again, cheaper than if you had shorted the stock. Cost was $12 for one. If you did an advanced trader risk, which I've been trading, like I said, for 17 years, so I'm at advanced level now. 8 contracts cost $9,600, sold at $55. Profit was $34,400 or 358% return on investment. I think this got over 60. I had a good exit, but I think it ended up getting over 60 that particular day. Now, if you had a smaller risk, okay, if you took one would have, again, cost $1,200 you would have had to have in your account to take it. $3,440. That's still a nice solid trade. Again, this is taking it and then getting out into the drop the next day. Okay? So again, even though I called the trade, go back to the chart, out for the 13th, that doesn't mean I'm holding it. Okay, options, again, it's about momentum. When you get the momentum, you get it, get out. You get it, get out. You don't wait around. Okay, this is, again, we're not swing trading. We're momentum trading. Okay? Any questions about that as I'm talking here? Again, you don't need a big account to do this. You can trade options with a cash account. Okay? Okay. Now, as I was saying, I like to short. Okay? I like to short. Tesla's a great example because that stock collapsed and dropped like 60 some points in that one particular day. I'm not saying you never get a move to the upside like that in a short, in a long, I mean, compared to a short, but it's rare. So again, panic buying is something that's so rare that it almost never happens, okay? Panic selling happens all the time, everywhere, almost every week in something, okay? So there's more opportunities to short and to make more money in bigger moves to the downside than there is to the upside. And that's really how I got involved with shorting myself in the first place. I also realized, again, very quickly when I started trading, that very few retail traders, regular traders, knew how to short. Many went long, preferred to go long. And a lot of educational places out there, again, when I first started trading in 2008, really didn't know much about shorting. They weren't teaching shorting. They were teaching people how to go long or buy the dip. So it was difficult to find stuff out there about shorting. So I ended up creating my own system. And again, there was very little out there at the time about gaps too. And even now, even to this day now, the bias for most retail traders is that they prefer to go long. Some of it has to do with the fact that, like I said, people just wrap their head around this idea of going long. They can understand buying low and selling high. People think about this idea of buying the dip. They can understand it. People, again, some certain types of accounts can't short or don't know how to set them up to short, so then they can only go long. And so there's a lot of reasons why retail traders, lean on the side of going long. But I'm telling you, I've made an entire career about mostly shorting. Now, again, sometimes I'll go long. There's a couple things I like right now to the upside, but not a lot. So again, that's another reason why I'm not excited about this market going over the high. Because in a bullish market, you would have many sectors and lots of things that would all be moving up together. And you're not seeing that. You're not seeing that in this type of market. Any questions here so far? How are we doing? Everybody okay? Okay. All right. Again, do I like to short? Yes. Again, that's what I'm focused on. And I'm focusing on the institutional money, not retail traders. So you wouldn't have something like a $60 move in a stock like Tesla. It's not just the move. It's the price point. It's the volume. It's all of it. It's the speed that it went to the downside that it sold off. So institutional money dumped it. Sold it, dumped it, okay? And I'm sure there were retail traders that shorted that too because it was on the news, it was everywhere, and then people piled in. But again, we were in that Tesla short before the 5th, before that move happened. So how did I know? Again, I was reading the chart to see that it would sell off. So institutional money is what? Hedge funds, big banks. Again, retail traders, if you get a lot of them together, could move a stock, but only if institutional money isn't against it. So this is a point of conversation maybe for another time because groups of retail traders get together in these chat rooms and take positions. and then sometimes they move in the direction of the stock moves. But it's only because a hedge fund didn't come in and take the opposite position, because if they did, they can wipe people out. And you've seen this and heard this in some nightmares for people sometimes when they are in positions and institutional money comes in and it does wipe people out. So you got to be very, very careful about the choices that you make, particularly if you decide you want to do something that is against institutional money, because it can happen like that you'll be taken out. There's just no substitute for that type of power. The leverage that institutions have far exceeds anything that any retail trader will ever have. The power, the money, the might, okay? And again, sometimes, you have a hedge fund, for example, that's taking a position for a reason that we don't know anything about. We don't know anything about, okay? And again, could be a long position, could be a short position, could be they're selling or dumping a stock. But in the case of Tesla, really, you had selling. You had selling. Actually, let me pull it up here. Pull up the smaller chart. Lulu, June 5th. I can look at it. I was going to pull up the Tesla, but I'll look at the Lulu. GameStop is one of them where, yes, people are in that and they're just down, actually. And they're just holding positions that are down. They'll probably hold them for a long time and be down, actually, because people don't want to sell. Because if you're in a position and you're down, and just listen to me, if you're in a position and you're down, until you exit it, the loss isn't realized. So that is part of the issue with what's happening with some of these meme stocks, where people are, the AMC is the other one, like people are holding so that they don't have to take the loss. Because until they sell it, they don't have to take the loss. These are stocks that people are long. GME is one of them. AMC is another one. So people are long, just like if you were long Tesla on that day when it sold off. If you sold, you realized the loss. So people are like, oh, we're going to be really smart. We're not going to sell. But actually, taking a loss sometimes is the smartest thing that you can do, because the loss just grows and grows and becomes bigger if the position continues to move against you. And that's just a fact. Do you know what I'm saying? So everybody has to take losses at some times. I take trades and sometimes they lose. But the reality is, holding it for weeks and months and years and 100 billion miles and doesn't make sense if it's just flat out freaking not going to work. Do you know what I mean? So that's part of the issue. Mohammed, what were you asking me about the Lulu? I didn't do anything with the Lulu here because we did the Tesla. I think, that day. Was that the day 6-6? Oh, no, maybe. I don't know. I don't remember. I don't remember what I did 6-6. Off the top of my head, I don't know. No, this was 6-5. Off the top of my head, I don't remember. I don't remember what I did 6-6, Mohammed. I'll have to get back to you. But you could have rated Lulu and it did work. I don't even remember if I rated it, to be honest with you. I don't think I did. I don't remember what I did the 6. Again, there's lots and lots of gaps that happen on any given day. I may choose to do one thing. Like there were other gaps today, but I did this. Actually, the other one I looked at today was Amazon, but I looked at it as a long. It would have worked. So I chose to do the SRPT, but I could have done this, and this would have worked too. So this was a bullish gap. I liked as a long, and this was my second pick. So I had 2 picks. I had 1 long and 1 short today, and this worked too. So either one of my picks today worked. So again, I usually just do one thing at a time, but you can do more than one thing if you want to. Again, you can do as many things as rate. As many things as rate good you can do, okay? Anyways, getting back to my point though, again, follow institutional money, because it's really the most consistent way that you can look at something to trade. So again, how do I determine what the smart money is doing? I use my tools. It is my rating system. It is based on technical analysis and gaps, okay? So again, what is a gap? A gap is a difference between the close and the open. So Tesla closed here, gap down, dropped. Tesla closed here, gapped up, rallied, failed, and fell. So again, you can't just go long every bullish gap, and you can't short every bearish gap. It's not that easy. So that's where I use the rating system to help me determine what to do. So again, I find gaps using a checklist, and they have to be qualified. The checklist tells you what to look for in the price of the stock. And again, everything I'm doing is on the daily chart. You know, a lot of people want to use different indicators. They want to use this indicator and this Fibonacci and this thing. Sometimes people have so many indicators on their chart, they can't even see the candles. They can't even see the price. They can't even tell what's going on. Again, look at the price action. If the stock's going to move up and get spot, then you want to be long. If it's going to drop and fall, guess what? The only way you're going to make money is if you're short. I know this sounds very simplistic, but it's true. So a lot of times people overcomplicate trying to think about what to do because of the fact that, again, they are thinking, well, if I use all of these indicators, it's going to tell me what to do and when. I mean, there's some platforms and some things where they have a system and it beeps and it says beep and it's an alert and it goes off ding and you're supposed to go long, you're supposed to short. I mean, that would drive me nuts all day if I had something like that on my platform. You know, I use my brain. I do the analysis. It works, okay? And there's no shortcut to not using your brain. So just come to terms with it. But again, since I'm not trading for 6.5 hours a day, it's not like you have to focus for a long period of time. You can be perfectly focused and use your brain for the first half an hour, hour of the day. Be on point, get up early, have your breakfast, do good, make your money in the morning, and you're good, you know? Anyways, we started talking about this earlier. I traded the side of institutional money for momentum moves. Big momentum equals big money, and that's what we want. So again, I get up early, and I go through the rating system, regardless of who's tweeting what, and whatever is going on, that's what tells me. Now, sometimes you're like, oh, well, you know, Israel attacked Iran, the market's down. If that helps you, again, you should be aware what's happening in the world. You're like, okay, fine, this is down, we have this is going on. If that helps you get conviction, fine. But if for some reason the rating isn't there, and then you see the news, you say, well, this doesn't make any sense, you go with the rating. You go with the rating. You have to go with the rating. This takes the guesswork out of your trading. Again, you can't automatically short something if there's negative news, just like you can't automatically go long something if there's positive news. And again, things can change on a dime. So does anybody remember, again, I don't know if people were trading when we had this. This seems like a very long time ago, but it actually wasn't. We got into the beginning of the year, came down, sold off in March, and then at the beginning of April, Trump put on the tariffs, announced the tariffs, the market closed here, gap down, and we tanked, okay? Then Trump paused the tariffs on the 9th, okay? Actually, this was the 7th, 8th, and 9th. Anyways, the 90-day deadline for the tariff pause is coming in July, the beginning of July. It's after July 4th week. So we'll see what's going to happen with that. Again, a lot of people think the worst is over with that. I'm not in that camp either, okay? So again, if you didn't know how to short to take advantage of this opportunity here, then you missed out on just huge opportunity for really big moves, really quickly, really fast, to capitalize on them. Whether you did puts or whether you just shorted the market outright or different stocks, just massive opportunity there to the downside. And again, like I said to start out the lecture, you need to know how to play the downside. You can't just focus on going long because it's not going to work in this environment. So again, I taught myself how to trade gaps and mostly short, and over the last 17 years I've become an expert in both gaps and shorting, and particularly reading direction. So it'll be interesting to see if I'm right if the market does have another sell-off this year, because again, I'm not long the market, okay? In order to become successful in the market, you have to become an expert, a specialist in one specific strategy. I choose a strategy that reads institutional money, which is what we've been talking about, or what I call power money in the market. This brings momentum and opportunity. Reading is a skill. When you use your brain and read what's happening in the price action, it's a skill set. And again, the skill can be acquired through education and experience. So a lot of times people get education, but it's not good education. They take trades, they lose money, then they get down in education. I get it, but good education will help you. So you can't get down on learning. You know, it was interesting because, again, there was a military parade. It was the 250th anniversary Saturday of the Army. There was a military parade. I watched a little bit of it. Again, it made me think about the Revolutionary War and the Civil War, and just, you know, hundreds and hundreds of years ago. You know, back in the day, like, people, it took, you know, you had to get on a horse to go visit people. You know, you had to grow your food or hunt for it. Like, we're in a world and an environment where everybody's impatient. Everybody wants everything yesterday, you know, and everybody wants everything now, you know. Like, I mean, I think half the world couldn't even survive back in, you know, Revolutionary War times anymore. Like, it's just so interesting. Like, again, 250 years ago, think how different the world was. Again, people just have become so lazy about putting forth their best to try to get somewhere in life. And again, this doesn't mean it has to take forever. It just doesn't, but you have to put forth some effort, okay? And more effort than the guy next to you, which actually in today's day and age isn't that hard, because most people want to put forth very little effort. Most people want to pay very little money for anything. People just want everything cheap. You're not going to get something good for something that's cheap. I told this story a long time ago where I bought these shoes. They were red. I ordered them online, and I got them, and they looked pretty, but they were kind of like not sturdy. I was like, okay, fine. I just wore them at a party that I had at my apartment. Oh my God, I had the worst blisters by the end of the night on my feet. I didn't even walk around the city. I wasn't even walking. I didn't walk like a mile in these shoes. I'm like, these shoes are garbage. Like, and again, I will never wear them again. I just wore them on my feet at a party and they hurt so bad. If you've ever gotten shoes like that where you've worn them and they're just like not good shoes. So it's like, again, you get what you pay for, and the amount of effort you put into something can pay off if you put a lot of effort into it. I think, again, looking back 250 years, people put effort into fighting for what they believed in. And that's how, you know, we got to be the country that we are in the United States and America. But things are so different now. And again, part of it could be social media. Part of it could be all of the things that we expect so quickly in the world, which help us. Computers, technology, I get it. But again, focusing on something and using your brain and allowing it to yourself to really get into it and learn something and become an expert and become a specialist and be really excited about doing that, and actually will really set you apart in today's world where a lot of people don't want to take the time, don't want to take the effort, you know. Anyways, trading education is very important. Far too often traders don't understand exactly how important it is. It's okay to ask for help and admit you do not know. And again, I tell people that when they take the class. You can ask me questions. I'm here. You can even ask me questions after the class. I want you to understand it. I want you to learn it. I'm not going to disappear after the class. It's okay to admit that what you're doing is not working. And I think that's a big problem for people too. Sometimes people's egos get involved with their equation and they can't just admit that, oh, this doesn't work. But they keep doing it, and it losing. If you're doing something and losing, chances are it doesn't work. The sooner you come to terms with reality, if you're losing money, that you don't know what you're doing and that you need help, the faster you can turn it around. And you can turn things around quickly when you know what to do. Again, one good, huge trade can make your whole week if you've been having a crappy week, and one good, huge trade or week could make your whole month, okay? So again, it's kind of a weird week for the market because the market is closed Thursday for a federal holiday. And then we have Friday, which is probably going to be dead. Probably nothing Friday. So it's a weird week because it's a short week for markets. But it could be a substantial week because of the Fed meeting Wednesday. And then obviously all the things that we have going on overseas. So going back to this, again, we were short Tesla way before that massive push down, that dump. Again, earlier in the year. And it's kind of funny. Actually, let me go back here. Kind of funny looking at it now. I'm just going to go all the way back. And any questions here while I'm talking? We piled in long in Tesla and made a lot of money going long Tesla in November of last year. Okay, so we were long this. Now this was a bullish gap up. This was a humongous move, and actually people shorted this. Then they thought it was extended. We just kept buying it. We just were buying it. I thought it was going to go to 500. Literally every trade in this worked. Even the last one, I was up in it. I didn't get out, and that was my fault. I thought it was going to go as a Christmas week to 500. I got close. I got within 12 points, so I held it, and my last trade went bust in this, but I was up in it. But again, this we were loving it until we weren't. Okay. So again, talking about institutional money, it will buy stocks and sell stocks. It will also short. Institutional money can short stocks too. Can I briefly discuss if or when you may short an index like the Qs and stock in the same day? What do you mean the Qs and the stock? What do you mean? If the Qs have a gap, if a stock is gapping with the market, and I think the market's in a certain direction, then I may do several market trades. I'm not sure if I understand your question. I'm sort of lost your question. If you're asking me if the market opens tomorrow at 470, I'm just making this up. It's not going to happen. But if the market gaps down to 470 to market tomorrow, if you're asking me if I will short any stocks with that, probably. But I'd have to look at the charts and rate them. I'm not going to short everything. But a lot of things would be down if that happened. Again, I don't know if that answers your question. The individual gap of any chart still has to be good on its own. Does that make sense? Again, I don't know. I'm not sure if I understand your question. If you mean am I trading things arbitrarily with the market direction, no. It still has to gap. It still has to rate good in its own. Just like the market, if I did the market. Does that answer your question, Dan? I'm not sure. Anybody else have any other questions? Okay, all right, we'll go back. Anyways, this we did, again, March. And it's kind of funny now because we shorted Tesla all the way back at the beginning of March. Again, March, April, May, June, 4 months ago. The price of this at the time we did this trade, we did the 250 strikes. Again, let's go back. 3.7 was here. So we did a put. This was 2025. This wasn't 100 years ago. So this was March, before the tariffs, before all of that stuff. We bought a put here, and we had a beautiful sell-off. Again, another institutional dump that came into Tesla way before the market sold off, way before tariffs, way before that. Okay? And it's funny now, when you look at this, you say, oh my God, we just did 330 puts, and they worked, and now this was a 250 put, and this worked. So again, it's like, again, I will hammer something either way. But anyways, cost of this was $9. I did 10 contracts. It was a good solid trade, 278% return on investment. Again, this was Tesla at the beginning of the year. And again, one contract, you could have made $2,500. So something, again, could wiggle and jiggle and wiggle and jiggle and wiggle and jiggle, which is exactly what this has been doing, going back to the chart here. And you could do it at any type of price, okay? Because again, we shorted this recently, and it was all the way up here. See where my arrow is? In the 330s. But we did it back here too. And I don't even remember the reason for that, actually. I don't even remember why we did that back then. It was so long ago. Anyways, again, how can you become successful trading? Number one, you need a winning strategy. Learn first. Learning is important. Number two, you need a supportive mentor. I do that for people by answering their questions, being in the room, running the room, calling the trades, analyzing it, going back over what happened. And number three, become an expert in one thing. Implement a winning mindset. Trade daily and trade with confidence and conviction. So again, what is a gap? There's gaps all the time, but not every gap is playable. A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So I'm determining who's in control when I'm rating the gap. If I see the bulls are in control, I will go long. If I see the bears are in control, I will short. If you are in the wrong direction, you're going to lose. So again, we're short Apple. It's been falling. We've been short. And again, whether you did day trades in this, puts in this, whatever, again, some people disagree with me. Some people are long Apple, okay? I'm not. So again, it gets back to the same thing. You always have somebody on the opposite side of a trade. Every time I'm short something, somebody else has 100% conviction it's a long. Again, who's going to win out? The one that makes the most money. The way that you determine, again, the success in trading, and I said this last week, I guess, in the class, you measure success as a trader by how profitable you are. This is not like, oh, you know, we're gonna make socks and we're gonna see who has the prettiest socks. You know, no, this is, if you're losing, you're not successful. If you're winning, you're successful. That is the measure of this. The only purpose of trading is to make money. Yes, it's fun and everything else like that, but it's only fun if you're winning. It's just not fun if you're losing. In fact, it sucks when you're losing, when things aren't going your way. So making money is fun, not losing. So that is the measure of success in this particular industry. It's just what it is. It's a very different type of career. So again, what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. You can take the trade in the direction of the gap. That's what I'm looking at every day. You do the trade as a day trader, an option. I didn't even look up options in SRPT today. I don't know if it had any. It might have probably had monthly options. I don't know what they cost or what the volume was. I didn't do any options today. But we shorted the stock. It was a good gap to short as a day trade, and we did it. And again, I'm trying to go through and find the best rating. If I rate 6 things, I'm going to do the highest rating. Now, it's not earnings season right now. Earnings season starts in a few weeks after July 4th. There'll be lots and lots of things during earnings season to do. But I still prefer to do one trade a day if I can find it. Now, I may do multiple options if it's a busy day, but those are easier to manage than the day trades for being in multiple things. But again, how do I know ahead of time where stock will go? I rate it. That's the genius of it. Again, we were in Tesla before he started fighting with Trump, okay? I didn't even know that was going to happen, okay? But then you kind of look back and you say, well, maybe somebody did know. Maybe somebody did know. I didn't, but maybe somebody did. Because this was all here, and we were already short this. So maybe somebody did know. Behind the scenes, maybe they were arguing. Because we were short this in here before this happened. So you see? So again, if you know how to read something, you can tell. It's there. You're just not paying attention to it. You're not looking at the right stuff. You know? Oh, here's the chart. Anyways, this was a nice trade. 6-2, we were in it. Let's go look back. 6-2, we did the 335s. Here. Closed here, gap down, dropped. Then we gapped up. And the trade was down. So we did the trade, then it was down. Then it started to go, then poof, boom. And that was the move. So like we were in this really early. That was Monday. And again, this is all before the argument. So $7 was the cost of this. Got in the second, out the fifth. Again, you exit into momentum. This was a huge, huge trade. It's the biggest trade we've had in quite some time. And again, this is an earnings season. In earnings season, we do have big trades typically. It's just been the period right now where we're at the end of earnings season, and the next earnings season doesn't start till the second week of July. So this was a 757% return on investment, a beautiful trade. Made $74,200. You could have risked more. You could have risked more than I did. You could have taken more. Again, do what works for you. It's about your sizing, the size of your account. If you did 2 contracts and risked $1,400, you could have made over $10,000. This is a trade making account. This is somebody that has a small account under 10 grand, $6,000, $7,000, $8,000. If they risk 1,400 or even one contract is 700, this really whops onto their account. And these are the types of trades, again, people that with small accounts need, because it's how you build your account up. Like if you don't have a margin account, if you don't have the 25,000 to trade on margin, you can build up your account by taking these types of trades. But again, it's all about looking at institutional money, reading the footprints of big position players before the momentum occurs. You can take the position in the right direction and get out after the new move happens for profit. But you have to understand how to trade with the side of power. And you need to know how to find it. So that's my job every morning. I take it very seriously. And everyone that trades should take what they're doing seriously. Again, I use my brain. It's my best asset. A lot of people don't want to use their brain to think, to trade. You're doing yourself a disservice. Use your brain. Knowing how to read what institutional money looks like is essential to become a successful trader. The benefit is that you can win big trading on this side of power. Okay, so number 2, you need a supportive mentor. I said this earlier. Again, do and follow. I call the trades in the room. I call the trades in the room. You take the trade with me and you can do it. And a mentor helps you stay focused. I focus, like I said, on gaps and shorting, but I call the trades. Now, this morning was kind of a crazy morning because I lost internet like 7 minutes before the open. Then my assistant Gerard popped on. I was able to get back. And then we did a fast trade in SRPT. It all worked out. And luckily I was able to get back up to get the trade. But usually I'm there 9 a.m. ready to go. And then we trade between 9:30 and 10. We do the fast, quick trades. We're in and out. And I'm the one that's calling the entries and the exits. Any questions here so far? See some people coming in late. I don't know anything about what Elon trades or what he's invested in or any of that stuff. Not that I don't care really. So I don't know. Anyways, why gaps? Gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Again, momentum, momentum, momentum. Then whether you have a small size or a large size, you will get a good risk to reward. Again, I don't get trades like these Teslas I've been showing you every week, but we do get them. And you have to be trading with me to get them. But we get a lot of them in the course of a year. Again, sometimes something happens out of nowhere I don't expect either. Like, did I expect that Tesla trade to work? Yes, I did. That's why I stayed with it, even when it popped up and I was down in it and I stayed with the trade. But again, did I know it would drop 60 some dollars and Musk and Trump would have a Twitter fight? No, I didn't know that. How could I possibly know that? Okay. So sometimes things happen and they really benefit you, if you're in the right stuff. Anyways, what do? I rate the gaps using my 26-point checklist, and this rating system determines who's in control, the bulls or the bears. The bulls or the bears. Again, then you take it in that direction. A big flow of money going in a certain direction is what moves the market, stocks, creates momentum, and sets the trend in charts. And again, we are sometimes going with the trend, sometimes we're going against the trend. It's neither here nor there. When you're looking for institutional money, you're really reading the side of power in a stock. You want to be on the side of the power in order for you to make money trading. Institutional money is in charge of the market and stocks at all times, even if you think it's not, it is. This is where a lot of retail traders get tripped up. They think something's going in one direction and it's not, and it goes in another direction, and then they lose in trades. And this could go on for quite some time. So someone could think this is happening, it could go on for days or weeks. And the longer it goes on and they're up in a trade and they don't get out with profit, or they double down and take more, the more conviction they have that it's a good trade, and then the trade gets wiped out. This happens all the time with people. And it can wipe out people's accounts. Again, we're not doing swing trading. We don't have unlimited risk. I take a trade, I put in the stop in a day trade. It's a hard limit order stop. If it gets stopped out, I lose. If I'm doing an option, I can't lose any more than the risk I have on, okay? But it is about focusing on quality, 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 not quantity. Again, if you went to like a party and they had a whole spread, like sometimes I get invited to these parties in New York, like these fabulous places, like they're like, oh my God, there's like 10 fabulous cakes and pies. Like, you can't eat 10 pieces of cake. You're going to get sick. I mean, you could, but you're going to get sick. So you say, all right, I'm just going to pick the favorite, best looking cake, and I'm going to have that piece of that one cake, and it's probably going to be delicious. So it's about focusing on one thing. It's not about, you're not going to get rich or fat or happy doing a million. You get one really good one. That's all that you need, okay? And again, that's how you do it. Here was the day that we did the short, the day trade in this here. And again, I didn't hold this. It's kind of crazy now looking back at where it went. Stock close here, gap down, open, sold off. The low in here was around 273. So this was the day that we did the short. Again, this is a trade on margin. 322.75, got out at 317.30. This is a good trade. It was almost 10 grand. It was a good, solid, beautiful, short, quick, done, boom. But it is kind of funny now. Again, 317-ish, I'm just approximating here, where I exited this and where this went with the size that I had. So actually, let's go 317. If I had held it down to 274, 43 bucks more times 1,800, I could have made over 77,000 in this trade, actually, just the margin trade. I didn't know it was going to go to 273 and change. I just did my normal thing. I just did my normal trade, and I was already in the puts. So again, I get this question all the time. Is it the best exit? No, I don't always get the best exit. I have a system. I day trade in the morning. I do the fast, quick trades in the morning, and I let the options play out. And this was just easier to do as an option. And I find a lot of times many of these things, to let them roll on down, the way this just kind of boom, like that, it's just easier. Same thing with Apple. It's just easier sometimes to do trades as options if you're going to hold it, whether it's for multiple days or whether it's on that particular day. Any questions here so far? Okay. Anyways, people enter my room, expecting to win. I mean, I do my best every day. Some days are either easier than others. Again, earnings season, I think, is a very busy time. That starts in July. I think this week, even though it's a short week, could be good because of the Fed on Wednesday. We had a good trade to start off the week. That was good. Again, you have to put yourself in a winning mindset that you believe that you're going to win. And you can get big trades. But you don't go into the day saying, oh my God, I'm going to make do-do-do-do-do. You go into the day thinking you're going to win. You do that, whatever you make is good. And you chunk it. You chunk it out. 500, 300, 1,000. Again, whatever your risk is has to do with how many share quantities, but your risk should be the same or close to the same on every trade monetarily. So you may be able to do 10 contracts of one thing and only one contract of another if it costs 14 bucks. So again, it has to do with the dollar risk. That's where it has to be equal. Okay? And then number 3, and I've been talking about this the whole entire lecture, become an expert in one thing, which I've done and made an entire career out of. So again, it's sort of like I don't have a million different things. I'm not teaching classes on Bitcoin and futures and whatever, crypto. No, I'm just trading gaps. I'm very good at it. I'm mostly short. That's it. And again, as the years have gone on, I've made more money because I've increased my risk, which is something that you can do too. As you get good at something, you can increase your risk because you feel that you know what you're doing and you feel more confident in it. And then it will help you also when you see one that's really, really good. If the trade goes against you, you can be like, wait a minute, let me go back. Let me re-rate it. Let me double, triple check it. Yes, this rated really good. I have plenty of time left in this trade. I believe in it. I trust it. And then again, the trusting in the system helps you too over time. Because really, it's about working smarter, not harder. Again, I could trade all day some days when I see something's going or continuing where they're going to go, or if I see other things. I don't like to do that. I like a 24-hour break for my brain to rest from the time I get up early, look at something, rate it, trade it, into the next day. And that, again, when I'm looking at something and focusing on it, I'm honed in 100% in what I'm doing in that moment, okay? It's about getting good. And I think it's a lot of the issue, I think, for people. Their sizing is all over the place. They never really get good at any one specific strategy. And I'm telling you, you got to. You got to. I mean, you just have to. But I've been trading for a very long time, and I'm very consistent. I'm very consistent with my gaps and shorting. So gaps happen in the market, like I said, on a regular basis. However, some gaps are better than others. So that's why we're looking for the good ones. Some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. And that is how you know when the power money will flow to pay you. So again, if the philosophy behind this explanation helps you, good. Again, I got into shorting because I made a lot of money because the move happened fast. But again, if you're like, okay, I have to understand this, fine. Shorting is something that a lot of people don't know how to do. And when a stock falls, it falls fast. Period. End of story. Again, if you don't believe me, you will someday if you're ever in something and the position goes against you and you could be like, woo, what just happened? Again, Tesla was a good example. We were already in that. But there were people that, again, going back after the fact, were like, oh crap, I should have done that or whatever. Like after the fact it happened, they jumped in like late or whatever. Like they were chasing it at the end of the move, probably after it broke like 300, for example. But stocks just fall so much faster. And again, the understanding of it is this idea of panic. Panic is real. It happened in the market, which we saw with the tariff thing. It could happen again with the Fed. It could happen again when the tariff pause deadline comes up at the beginning of July. It could happen because of a war conflict with Israel. I could name 10 different things right now that could happen. Today, tomorrow, next week. Okay? So again, panic is something that's very, very, very playable. All right? And again, it's selling. So be consistent. Think about what I'm saying. Think intellectually. Use your brain. Your brain will help you decide what to do. So if you decide you want to come and take my class and learn from me, the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable. Golden gaps are a highly profitable strategy because they focus on large momentum to trade. What stocks should you trade? Stocks that gap and rate 20 points or more per the 26-point rating system. This is what I teach in the class. You trade the gap in the direction of the gap. When do you trade them? Early in the morning in the open when they set up and trigger, which again, I'm doing them very fast at 9:30 into the open, trying to get out in the morning, 10 a.m., 10:15, 10:30, but I'm usually not trading in the afternoon. And you must have a structure in place to make any money at all consistently. It's extremely important because, again, there's too much news, too much going on that you could get sucked into doing things. It's not always what you think, okay? The consistency in me producing the trades where I have a high win ratio is not about the fact that I never lose. I take trades that lose. It's about the fact that over the course of a week or a month or a year and several years, if you apply the system, you're going to get where you want to be, which is ahead. Again, the measure of success in trading is if you're profitable, if you're up money. You can't say you're successful if you're losing. It just doesn't work. You have to have more winning trades than losing trades. And you need the staying power too. And that's why I always tell people risk small amounts. Start slow. Start with a beginner level. Because you need to understand what's going on before you can take big risk, even if you have the cash. Even if you have a big account, okay? Anyways, if you want to learn the system, it measures gaps by rating them in the daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day. Number two, big move in the day. Number three, early confirmation of the bias and the move between 9:30 and 10. And the precise entries with follow through and a good risk to reward target potential. So I teach the entries and the exits in the class too. So if you're like, okay, I want to do this, get a plan of action together. You're going to take the class. If it's in July, you're going to learn. You're going to decide your risk. And then you say, okay, for 3 months, this is the next earnings season, June, July, August, I'm going to risk this much. Then I'm going to evaluate for the next earnings season. Then I'm going to look at September. Go by the quarter, okay? Look back, see what you're doing. Track it. I'm very big on tracking, okay? And you create a money management plan for yourself. You have to, that's how you have to work forward. Because again, going back to the fact that everybody wants everything yesterday, risking your whole account, holding trades forever, pushing the envelope, doubling down, that's not going to get you where you need to be in today's environment. You will set yourself apart if you're willing to do the work. Spend the money, do the work, spend the time. Take a weekend where you don't go outside and you don't, go out in the summer or go to the pool, where you say, I'm going to study and get this down, or even do the class. I mean, I have some people, and again, this is their choice, that have paid for the class and haven't done the whole class. They just want to get in and start trading with me. Well, they would trade better if they did the class. They paid for it. It's like, I don't understand. People don't even want to give up their time on a weekend. You have to put the effort into this if you want to do well. You really, really do. And again, I'm here to help you. You know, reading charts is something that I like. So I like doing it, you know, but some people, you know, aren't as focused. But I think you will achieve your goals faster and get where you want to go if you're more focused. Anyways, you're closer to realizing your dreams than you think. This is real, and you could do it. Any questions from anybody here? Let's see. I don't know what option you're talking about, Tessa. We did so many. I had a few in here. Matt, that I talked about even back to March. Anyways, the system that I use is, again, the checklist. This is what you will learn in the class if you decide you want to come and learn. And again, you will learn why. Why did this work? Why? How did you know Tesla was going to fall? Again, I rated it. Like, how did you know Apple was going to fall? I rated it. And again, learning how to short is something that really, really can also set you apart, because a lot of retail traders are not good at shorting, prefer not to short, can't short, don't understand shorting, and they get caught and they can't take opportunities. And like you see where you saw in the market with the tariff situation, which could happen again. Could happen again. So empower yourself today. Learn a complete system to trade. You will learn in the class the rating system. That's the whole day Saturday. Sunday is all the entries, exits, and we go over targets. So the class is called the Golden Gap Course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. The class tuition is $69.99. It's July 12th and 13th, 9 to 5. Classes online. You can be anywhere in the world and take it. And I'm doing the JAWS anniversary special, which I extended this week. There were people that were interested. They've got another week to sign up now. I extended this for this week, and actually the JAWS official anniversary is June 20th, actually. So I'm doing this through Friday the 20th. That's the end then. So I ran it last week. I'm running it this week. It's $89.99. You will sign up. You will get 3 classes: the Golden Gap course, the Trends course, the Gap Options course. They're all online. And the anniversary package is that you get 3 subscriptions free for a year. You get an extra class, which is in July, the Wealth Manifestation class, and then 2 one-hour mentoring sessions with me. This ends the exact date of the 50th anniversary, which is June 20th. And again, some people have already signed up, and they'll get whatever trades we do this week. So your subscriptions start as soon as you join. Any questions from anyone about anything? Again, I see some new faces. June 6th. June 6th. What about June 6th? I don't know if I did Tesla June 6th. June 6th, we didn't do a short in this. This was a gap up. We did not do any day trades in this June 6th. The trades that we went over was, again, we were here June 2nd, and then we did trades here June 4th, and then we did trades here June 5th. So we were in Monday, June 2nd. The tweet situation happened on the 5th. It was the same week. This was Monday, Tuesday, Wednesday, Thursday. This was Friday. So anyways, I recognize some of you. I know follow me for a while. This is a good special for the anniversary special, and that's why I extended it. It gives you a lot. 4 classes, 3 subscriptions. Think about it. Again, I love this movie. It's probably going to be on all week on some channel. It was on last Friday or Saturday night. They had them all. Jaws 1, Jaws 2, Jaws 3. The best one though is the first one. So if you're interested, email me. Anybody has any questions? Good to see some of you. Again, be very careful trading this week. And if you're interested in joining, email me at melissa@thestockswoosh.com. Have a wonderful, wonderful, wonderful day. You're welcome.